Fund Supermart, your online gateway to unit trusts.
The Hong Kong and mainland stock markets have experienced a roller coaster ride this past year, and investors are understandably nervous. Do you think there's going to be further correction in these markets?
Well, valuations on Chinese equities have gotten very, very high, so there's no surprise that there's been a recent correction. However, we're actually quite bullish on China in the long term. So there's a couple of specific themes that we think investors really should be focused on. One would be the state-owned enterprise reform. So under the presidency, he's actually putting in place a lot of policies which will bear fruits. So I think looking into the railway sector, looking into the gas sector is something which would warrant some attention. A second theme that we like is the growing middle class in China and their need for the wealth management products, along with insurance products. So AIA is a classic example of a company that's going to benefit in this environment. And then finally, we like companies that actually support the global e-commerce logistics sector. So, obviously Alibaba is doing tremendously well in terms of online sales, but we like companies that provide warehousing and infrastructure support to this particular sector. So for investors that actually remain invested in China, returns look good over the medium to long term.
So you are buying China right now then?
We are, but we're using the H-share market in order to gain access to Chinese equities. Obviously, in the mainland, through the H-share market, liquidity is somewhat trapped. In the Hong Kong market, you obviously get much better liquidity and companies that operate according to globally internationally accepted standards. So obviously, being invested through the Hong Kong market, we think is the way to go. And right now, you get a much better valuation on the H shares versus the A shares.
Besides China, are there any other bright spots here in Asia that you like?
For sure, there's a number. Specifically, we like developed Asia at the moment. So across the Singapore, Hong Kong and Australia markets, we've just talked about Hong Kong, but specifically Singapore and Australia, you have a host of companies that are actually doing extremely well in this lower but still strong Asian growth environment. So specifically in Australia and New Zealand, you've got companies that operate in a very strong macro framework, where very strong fiscal policies from the government, you have stable currencies, you have companies that pay attention to shareholder culture, i.e. paying dividends, as well as strong corporate governance. So one of the funds that we find that actually is doing particularly well at the moment is the Developed Asia Growth and Income Fund, where you get a host of companies across the Singapore, Hong Kong, Australia spectrum.
What about other markets in Asia? Any other ones that look potentially interesting?
So selectively, there are other countries that we are buying into at the moment. Thailand would be one. So after 12 to 18 months of this new government under Premier Chayut, he's now starting to turn his attention to economic policy. So infrastructure development in Thailand, for example, the cement sector, is one sector that we think is looking pretty interesting at the moment. Other countries that we'd like would be Taiwan and Korea, which are plugged into the global tech cycle. So obviously, the iPhone and the launch of the iPhone 6S is a classic example of companies that are going to do well supplying into that release sometime September onwards.
There's been a lot of buzz about India and Indonesia because of the new governments coming into power there. What do you think about those two?
It's really pleasing to see what's happening in India and Indonesia. And what we particularly like about these countries from an economic policy perspective is that both Jokowi and Modi are likely to be in power not just for the next 4 to 5 years, but they'll both probably be re-elected and are going to be in place for perhaps up to another 8, 9, 10 years. So you're going to see a lot of strong economic policy come through from a very stable government.
A Fed rate hike. That's the big question. What do you think the impact is going to be on Asian markets if and when that happens?
Okay, well, we certainly know it's going to happen at some point, if not in September, November, perhaps first quarter next year. And then you'll have divergent policy within Asia versus the US. Recently, you've seen Australia, China, India, Thailand, they've all cut rates. So this is actually quite stimulative for the economies there. So you have a real divergence opening up, and we think this is going to be great for Asian equity markets.
Can you give us a brief overview of the Asian equity funds you have at Columbia Threadneedle?
Sure. There are 3 Asian funds at Columbia Threadneedle that we think investors should take a look at. One is the very popular Asia Growth and Income Fund. So this is the Developed Asia Growth and Income Fund that invests across Singapore, Hong Kong, and Australia. So as we noted, within those geographies, you get companies or access to companies that have great corporate governance, also pay strong attention to shareholders and the dividend payments. So you get a nice blend of capital appreciation from growth stocks, but also income for those investors that look to and need an income stream from their investments. A second fund that investors may want to take a look at or may consider would be the Asian Contrarian Fund. This is opportunistically looking at companies that are mispriced in the market, and is there some catalyst as to why you'd perhaps want to own those stocks. And then a third fund that we have is the Asia Focus Fund, and this fund is a concentrated strategy of our best ideas.